What if you could trade with $1 million without risking a single real dollar? Sounds like a dream, right? Well, that's exactly what the paper trading simulator on BeCoin.net gives you. And the crazy part is, most beginners skip it and jump straight into real money trading. That's usually where the losses begin. Today, we're breaking down how paper trading actually works, why it matters, and how you can use it to build real skills before risking your cash. So, first things first, what exactly is paper trading? Paper trading is basically a simulated trading environment. You get virtual money, sometimes $10,000, sometimes even $1 million, depending on the platform, and you trade real market data. So the prices are real, but the money isn't? Exactly. It mirrors the real market, but there's no financial risk. You can buy, sell, test strategies, and track performance just like a real trader. Think of it like a flight simulator for pilots. You don't fly a real plane on day one, you practice first. Now, here's the important question. Why does paper trading matter so much? Because trading is not just about predicting markets, it's about controlling emotions. And emotions don't show up until real money is involved. So paper trading helps you learn skills without pressure. Exactly. It helps you build entry and exit timing, risk management habits, strategy testing, market understanding. And mistakes are guaranteed at the start, right? 100%. Every trader loses in the beginning. The difference is some lose virtual money first, others lose real savings. So, if paper trading is the flight simulator, what exact instruments should beginners be looking at on the dashboard? Great question. To get the most accurate reads on the market, you need a strategy. Let's look at two beginner-friendly indicators you can start testing right now: Bollinger Bands and the RSI. Let's break those down. How do we use the RSI? We just add the RSI to show us when the market is overbought or oversold. If the line goes above 70, it's overbought. You wait for it to bounce back down, and that is your clear signal to put. If it falls below 30, it's oversold and ready to bounce back up, and that's a signal to up. Got it. And what about Bollinger Bands? Bollinger Bands act like a ceiling and a floor for the price. When the price hits the top band, it usually bounces down. When it hits the bottom band, it bounces back up. So how do we combine these in a paper trading account? Now I select the expiration time, then I choose the chart's time frame, and then I decide how much to invest. Let's say around $100. Okay, everything's in place. Notice this massive green candle. It smashes right into the top Bollinger Band, and the RSI is sitting way above 70. So the market is overbought and hitting the ceiling. I clicked down, expecting a reversal. And look what happened. The price didn't drop. It kept pushing up, and the trade was a loss because the upward momentum was just too strong. This is a classic trap. Just because the market is overbought doesn't mean it will reverse instantly. That's why you never trade just on the touch. You have to wait for the price to actually start bouncing back down before you enter. Now, look at this second trade. This is how you do it right. The price pushes up to the ceiling again, but this time I didn't rush. The RSI went above 70, but instead of just guessing, I waited for the RSI line to start pointing downwards. And if you look at the chart, that last red candle confirms the price is finally dropping. So that is the bounce we were waiting for. The momentum shifted. The reversal is confirmed, so I placed a down trade. And this is a much higher probability setup than just blindly catching the top. And this time, it brings a win. Let's move on to the next trade. The price hit the bottom Bollinger Band, and the RSI bounced up from the 30 line. Right on the screen, we see this massive green candle pushing up. It looked like a powerful reversal, and the perfect time to enter, so I placed an up trade. But I lost this one. Why? Look closer at the RSI. After that initial bounce, it didn't keep rising. It just lingered right in the middle, around the 50 mark. Even with that massive green candle, the buyers didn't have enough momentum. The flat RSI at 50 was the real signal that the downward trend was still in control. And soon after, the price crashed right back down. Here, the price dropped and bounced off the bottom Bollinger Band. But unlike that previous fakeout, look at the reaction. The price confidently surged upward with strong momentum. I checked the RSI, and it wasn't just flat, it was clearly angling up, showing real buying strength. Because the bounce was aggressive, and the RSI confirmed the upward movement, I placed an up trade. The momentum carried right through, and this one was a clean win. It shows exactly why waiting for that strong confirmation is everything. So, let's be honest. Paper trading isn't perfect. There's a big psychological gap. People often take unnecessary risks because it's not real money, so they behave differently. Exactly. And that becomes a problem when switching to real trading, because real money equals real emotions. Fear, greed, hesitation, they all show up. And when should someone actually go live? Not after one lucky streak. You go live when you follow rules consistently, you manage risk properly, you understand your mistakes, and you stay stable emotionally. So, readiness is more important than profit? Always. Profit without discipline doesn't last. And that's it. If you're serious about learning trading, here's what you can do next. First, if you want to test real market conditions with a low starting point, you can join Quotex through the link in the description. You may also get a deposit bonus depending on ongoing offers, which can help you start practicing with more flexibility. But remember, bonus or no bonus, risk management always comes first. And if you want to actually fast track your learning with structured guides, setups, and breakdowns, you can also join BeCoin Premium. It's where we go deeper into strategies, beginner mistakes, and real trading psychology that most people don't talk about. Because watching videos is good, but having a system is what actually changes results. Start smart, practice first, then go live with confidence, and we'll see you in the next one.